In this video, I'm going to be breaking down where you should be investing $1 million. Now, if you have $1 million and you have a full-time job, there's a couple of different ways and methods that you can invest that money. But it depends on a couple of factors. If you're a real estate professional, how you make your current income, and how much time you have to dedicate to this new investment strategy. So I've actually come up with a framework to help you decide which strategy is going to be best for you, depending on all those factors. With that being said, let's get into the video. All right, so we're going to be on the iPad today. If you have $1 million and you want to invest that money, there's a couple of different ways and strategies that I would recommend to invest that money. It depends on a couple of different things. We're going to start off with a handy dandy little chart here. We're going to go like this. On the left, we're gonna have your time. This means like how active do you wanna be in this investment? So for me, there's a big differentiator of people who wanna spend over 3 hours a week and less than 3 hours a week. Decide which bucket you're in. Obviously, this might change as you kind of go through life and as life changes, but just think about that as we're going through this exercise. Are you going to be a little bit more active over 3 hours a week or more passive, less than 3 hours a week? Then I want to know how you're currently making money right now. Is most of your income active or is most of your income passive? Now, I know most people's income is active, but in the off chance that your income is passive and you have some passive investments that you want to write off, then we can kind of go through those as well. Active income would be a W-2, something you spend active time on every single day, every single month, to go out there and earn. This would be a W-2 job, a 1099 job. Those would be all active incomes. Passive income could mean that you have a bunch of rental properties, a bunch of apartment buildings that you're invested passively on, that you're not managing, you're not maintaining. You have other people, GPs, managing those investments for you. It could be that you don't have any income, you don't have any active income, but you have $1 million. Then I would just put you in the passive category because you don't have to write off anything active. Active income is one of the hardest things to go out there and write off. After we go through this, we'll talk about the real estate professional status. First, let's start off with active. So let's say you have active income and you want to invest in something over 3 hours a week. There's a couple of different things that you could do. If you want to be an active real estate investor, you could flip houses. You could co-GP. Flipping houses, pretty self-explanatory. You buy a house, renovate it, rent it out, and sell it. If you want help flipping houses, there's a link top of the description. It'll show you how to go out there and flip houses. It says want to flip houses, just click on that. Co-GP means you partner up with guys like me. We go buy an apartment building together and we split the profits. You actually sit on a fund side at the table. You help us raise money, help us find the deal, help us do everything that goes along with being active in a real estate deal. So if you have active income and you want to spend more than 3 hours a week, you can either flip houses or be a co-GP in a deal. Something else that you can do, which I've heard other people doing, is doing Airbnbs. Airbnbs, when you actually buy an Airbnb and the minimum and the maximum length stay is 7 days, that is considered buying a business, even though it is real estate. We'll go over all like the different tax strategies in here in a little bit. And I'm also want to break down the returns. So I'm going to break down also the ROIs of all these different things too, for you guys to see the different kind of ROIs that I would flag these at, and then we can go and put them all back together. Active, flip houses, co-GP, Airbnbs. Those are kind of your three main options. I'm obviously not talking about there's like a billion different ways to invest. I'm just talking about the things that I know that are tried and true. I flipped over 650 houses. I have a real estate fund. We bought 4 apartment buildings this year. I've never done Airbnbs, but I have a lot of friends who have built large Airbnb portfolios. I have a general gist of the Airbnbs and I have deep insight to the other two strategies. Now, if you have active income and you want to do something more passive, less than 3 hours a week, that would be something like being an LP in an investment. And if you have over $1 million liquid, you are already an accredited investor. Because you're an accredited investor, you can actually become an LP, and that means you invest passively into somebody else's deal. For example, my fund, Red Brick Equity. We have an apartment building under contract right now. We're raising $1 million for that project. People can invest into that project and get a piece of the profits. You can do this with us. You can do this with many other companies. If you want more information, click the link top of the description. Again, this is not an offer to sell securities or anything like that. Just letting you know how real estate funds work, and you can invest passively into these funds and you would be considered an LP or a limited partner in this investment. Something else that you can do passively, even though you may have active income, is you can do turnkey rentals. Buying turnkey rentals, this would be like martelturnkey.com. Again, link top of the description if you want to go and do that. This is when you buy houses that are already renovated, already rented out, tenants in place, property management in place. Martel Turnkey will help you find the property, help you get a loan on the property, help you build a real estate portfolio. It's not going to take more than 3 hours a week. You can buy as many turnkey rentals properties as you like. We'll go over the returns in a little bit. So now moving over to the passive income side. If you have passive income, you can still do active investments. They're just not going to help you with the writing off on your taxes. So I'll go over that in a second. If you have passive income coming in, you can still do active investment. You can still flip houses. You can still co-GP on deals. You can do Airbnb. That's much more passive. Less than 3 hours a week would be being LPs or buying turnkey rentals. This down here, real estate professional status, is where things really start to change the different strategies, because right now they look the same. If you have active income or passive income, it doesn't really matter. It depends on what kind of income you're trying to offset. If you're trying to offset your W-2 versus like a passive investment, then you have to have a real estate professional status. If you have a real estate professional status, then I'm going to go ahead and highlight which ones you can actually use to offset that income. For example, if you have active income from your W-2 job and you wanted to do some sort of bonus depreciation or write off a certain amount, do something like that on the active income side, it would only make sense if you were doing something active. Let's go ahead and talk through them. If you want to flip houses is not going to provide you any kind of tax advantages. It's just going to make more money and make more income. So that one is not going to help you with taxes. If you were going to do something like a co-GP, then you would have the ability to write that off. If you were going to do something like Airbnb, you do not have to be a real estate professional, but you can save money on taxes. That is buying a business. It's not necessarily buying real estate, so you don't have to be a real estate professional. Airbnb is a good one. Co-GPing, buying an apartment building with somebody else, or buying a real estate apartment building with somebody else and getting the bonus depreciation, you can do that. Let's change the color here of the Airbnb, because this one's going to give you the tax benefits. For active income, if you're doing something passive, it's not going to really help you with your taxes or tax strategy or anything like that. Really, the only two ways that if you had $1 million to invest and you wanted to get some sort of tax benefit, tax strategy, would be co-GPing or buying your own apartment building on your own, being the GP yourself, but buying apartment buildings. You do have to be a real estate professional. And what a real estate professional is, 750 hours a year or 50% plus of your time in real estate. This is something that your CPA can help you with. I'm not a CPA, I'm not a financial advisor, anything like that. So go ahead and make sure that you are a real estate professional so that you can do this, because this would be co-GP or just buying multifamily. So buying apartment buildings, you'll be able to do bonus depreciation on those and write off your other active income. For Airbnb, it doesn't matter so long as the stays are below 7 days, a unique one that's kind of like a business. Now, obviously you can buy other different types of business, but the great thing about Airbnb and the Airbnb business is that you can do bonus depreciation on that property. If you invest as an LP, you're not going to get that, because passive incomes can only write off passive incomes, or passive losses can only write off other passive incomes. If you're doing something active and you have some active income, you can only do something active, which is being co-GP, buying an apartment building, or doing an Airbnb. Being an LP and buying turnkey rentals is not really going to help your active income. Unless you are a real estate professional, then you could buy turnkey rental properties and actually offset them, because you consider that kind of active, even though it doesn't take much time. And that's why I like splitting it up between like how much time do you actually want to dedicate to this. Because obviously going out there co-GPing, buying apartment buildings is going to be a lot of time, like 3, 4, 5, 10 hours a week. Investing as an LP is passive, and it's passive legally on paper. Buying turnkey rentals doesn't take that much time, but in the CPA's eyes, you own the real estate, you manage the real estate, so you could get a benefit. Anything that I'm starring here is going to just be things that may have certain tax advantages for you. Let's say you have a lot of passive income that you want to write off. You own other apartment buildings. As an LP, you have passive cash flow coming in from different businesses that you're not active on. What are some of the things over here that you can use to write off? One, if you are an LP, you can write off passive income with passive losses from being an LP. So you invest in somebody's fund, they give you bonus depreciation, they give you tax flow, that all flows to you, but you have to be a real estate professional, and it only writes off other passive incomes that you may have. Yeah, you're an LP in a bunch of other apartment buildings. You invest in a new LP, that new LP can write off your other ones. And that is pretty much it on the passive side. There's nothing else that's gonna allow you to write off your passive income. You have to do something passive. The only thing on this list is the LP. That is the definition of passive. All the others, flip, co-GP, Airbnb, buying turnkey rentals, are all kind of considered active and that you're involved. In order to write off your passive incomes, you have to do something passive as well. Now, with all these different strategies, the last point that I want to make is kind of an ROI. Flipping houses, we have turnkey rentals, we have co-GPing, or just like buying apartment buildings on your own. We have Airbnb, we have being an LP. These are all the different strategies we have. There's 5 different strategies that we can kind of implement. ROIs that we can have. Obviously, some of them are active, some of them are more more passive. So that's going to greatly affect the ROI. What I have seen, I have flipped over 650 rental properties, turnkey rental properties. What I'm seeing on a cash flow wise, and this is going to be annually, is this is like 100%. So this means if you invest 100K, it'll turn into 200K in 12 months. Pretty crazy. Very active though. So you have to weigh that into your consideration. If you have $1 million, you can turn it into 2 million in 12 months if you were able to invest all that money and flip all those houses. Turnkey rentals, annualized return will be around 10%, but you get the tax benefits, and the tax benefits, depending on how great those tax benefits are, could raise this all the way up to 15%. Co-GPing, buying apartment buildings. I'm noticing these deals right now are around 15%. If they help you with taxes, it could be up to 20%. I'm putting brain damage over here because with all these different strategies, there's also like a little bit amount of brain damage that you get as you kind of scale up. The higher volumes that you do, the more that you invest into these things, you're going to realize how much more brain damage you get as you try to scale it up. And some of these are going to have high brain damage. For example, flipping houses is very, very high brain damage. Hard to scale. You're not going to enjoy it. Turnkey rentals is medium. It's pretty turnkey. You buy the houses, they're already renovated, rented out, cash flowing, all that kind of stuff. Pretty medium. Co-GP is pretty low brain damage. Very scalable, long-term assets. You can hold them for 10, 20, 30 years. Airbnb, I've noticed a 10% return, 15% with the tax benefits. I would say it's pretty high brain damage as well. You have regulatory risk, you have ups and downs of the real estate cycle, you have the property swing, there's a seasonality, there's so many different things with Airbnb, so I would call that high brain damage. And then being an LP, I would say it's 15% to 20% depending on the taxes. And this is going to be very low brain damage as well. The two best things which get you the highest ROI with the lowest brain damage are these two: co-GP or buying your own apartment buildings, and being an LP. Flipping, turnkey rentals, Airbnb, these are great. They can make you 10 to 100% returns, but the higher up the brain damage meter is, the kind of lower I put that. Because, if you have $1 million and you're watching this video, you already probably have some great active income, passive income coming in. This also too is why I went with flipping houses, because you make 10 times the ROI. It's still high brain damage compared to Airbnbs. And turnkey rentals are great. They're pretty passive. It's hard to scale past like 50 or 100 turnkey rentals. That's when I would recommend just getting into the co-GP side. You make a higher ROI for less brain damage. Now, if you want to be a co-GP or an LP, click the link top of the description. Check out a deck we're raising money for right now, and then go ahead and book a call with me and my team. We would love to meet you, chat with you, and kind of share with you more about these strategies. We can also help you with the tax side if there's any like tax connections or CPA connections you may need to help you get to the next level, especially if you have over $50,000 to invest in real estate. Thanks so much for staying to the end of the video. Make sure to like and subscribe. Comment down below, what do you want to see on future videos? Thanks so much. See you on the next one.